Good evening, ladies and gentlemen. Hope you all had a good trading day. And I'm just going to summarize today's trading day. I took an early exit as well, potentially leaving 3 to 4 points on the table, but I'm happy to do that. I'll get into why I took an early exit as well. But let me go over the trade. First of all, as I've stated multiple times, gap ups are not super attractive, especially when we had this big downtrend situation for a while, because gap ups will invariably lead to a little bit of an IV crush. Yesterday I didn't trade because of that very reason, because I didn't find the premiums to be attractive. And secondly, but the thing is, today is a Wednesday. Yesterday was a Tuesday. Being a Wednesday, all weekly options are going to expire tomorrow. So potentially there is a lot, it's easier to trade, high probability to make money in super OTM options. So with the gap up, the idea was that, okay, we've gapped up. We could potentially fill the gap at least to like get out some of the weaker longs in the system, but that didn't happen. And one more thing I explained about how gap ups work is, see, whenever you gap up, the reason most of the time IV gets crushed is because people who are long put options, they dump them, they get rid of them because they want to book their losses. Whereas people who are short call options, they don't immediately cover. I mean, there will be of course an initial spike, but if that gap up continues, that is when you'll start seeing the real short covering. Like had we borderline looked like we might be heading to 17,500, the calls would have tremendously blown up. Anyway, in line with how things have been for me lately, my entry wasn't great. And given that my idea was to be slightly delta negative from where the spot was, that also backfired a little bit. So I'll get into that. I entered my position. First of all, I had my quarterly settlement. So I had to send my accountant to the bank to transfer back. About 20% of my margin was not available. So I was trading about 15,000 size, and 17,000 and 17,600 was the strikes that I shorted. Now at this point of time, what ended up happening is 17,600. If you see, I shorted at what price? 12.5, right? Yeah, 12.5 is the price at which I've shorted, and this is what you see. Just 3 candles, not even very big candles, 3 candles, and this has gone from where I shorted it at basically the day's low, right? It has gone till 21. My put options have given me a little bit of profit, but overall on a 15,000 size, my position is almost 90,000 in the negative, which means I am 6 points down in the first 3 candles itself. But the thing is, this is super OTM. At that point of time, PCR was 0.6 with huge amount of open interest at 17,500 call, and I had shorted the 17,600 call, so I wasn't particularly too concerned about that. But I had to balance my trade, and I'll get into what I did. But the reasoning is that why didn't I exit that call? Because look, tomorrow is the expiry. I am way above this maximum open interest at that point of time, what was 17,500 call. So it's not going to be like easy to keep that momentum up. Of course, people got scared. They started covering calls at all levels. But that IV spike will have to go down, or at least on the counter side, the 17,150 and 17,200 put, which at that point were available for 16 and about, I think, 23 something, will have to go down in price. So one of the two will have to happen, given that tomorrow is the expiry. So what I ended up doing, just about 923, bought back the put option at 17,000, moved it up immediately to 17,150. Why? Because the call is trading at 21.22 and I'm getting 16 rupees on the put side, still keeping that relative delta negativity, but not as much, like for example, if we continue to go higher here, I would be protected for a little longer. If not, I would not, because that 17,000 put had some 6 rupees or something. Well, it's not going to lose much. So anyway, that happened. After that, really didn't do anything. Around 11 o'clock, I got my additional margin available, and around 10:30, I just added a little bit more quantity at these particular prices. Same strikes, same everything. Idea was that if we take out the day's high and the call option goes above the particular swing, which was around 17.5 to 18.5, that particular swing, I will exit the trade. It didn't. We had this down move, and here just around 120, I took the exit because The spread was trading at about 20 rupees. Best case scenario, I mean, even now it's trading at 20 rupees. Best case scenario, it ends around maximum of like 16, 17, which means it can give up potentially if nothing happens. We don't have a breakout in either direction, because the entire day market has done nothing but consolidate, right? So it's been in this very tight range. So if we break here, I'm going to lose more than 3 points. Definitely. If we break here also, I'm going to lose more than 3 points. So it just didn't make sense for me to continue staying in the trade. And because there's an RBI event tomorrow also, the premiums are not going to completely crash. I mean, if there's some expectation of, okay, something can happen in the event, the premiums are not going to completely melt away. So it just doesn't make sense in that situation for me to try and make another 3 points here, which is why I've exited. Also, one more thing, as far as the open interest is concerned, in the first 30 minutes, it would have been very easy for me to get stopped on this candle. The reason I didn't get stopped, I'll go over there. If you see this 17600 call, even though we made a day's high, here, it didn't take out its previous high, which is why I didn't get stopped, because its previous high, I mean, if you see, the 17600 call made a high of around 22 here at this particular level. But when we went here also, we didn't break that high. That's why I didn't get stopped out. That's why I didn't move up my puts as well. And because I didn't move up my puts, I actually lost out, because puts actually ended up losing a lot more. If I had moved up to 17200, I would have made 3 points additional around here. Even if at this high, if I had moved up my puts to 17300, I would have made 3 points additionally. So yeah, relatively risk off day one, because IV crushed, two because now people are suddenly getting again bullish and whatnot. So in that case, if we do have once again a sell off, because there was huge amount of put writing in the morning, now if that starts to get unwound, it'll just as quickly as puts crash, they will gain back. Didn't want to deal with that. And because there's an event tomorrow and potentially my gain from this is not too much versus what I can lose, I just exited. Like, I mean, I exited at 20 rupees almost 20 minutes back. Yeah, at around 20 rupees, you can say 20 rupees 80 paisa, and it's still trading about there only. So yeah, thank you so much for watching. I hope you had a good trading day. To be honest, tomorrow is expiry. I'm not particularly sure how it's going to pan out. It depends on what kind of premiums we open at, and depending on that, only one would be able to construct a trade. I wouldn't be too quick to try and take big risk in tomorrow's expiry, because there's an event to go along with it. And given that this week has been extremely volatile, the expiry also could be relatively difficult. Last month, I think, especially the last three expiries were really, really annoying to deal with. So yeah, most likely will be a very risk averse expiry approach. Thank you so much for watching. And yeah, I will keep you posted on Twitter about tomorrow's trade. Take care. Bye bye.